August data for Chinese exports is out and it's not looking good. Exports are growing at a slower pace than economists did predict, and that's going to cause some dire consequences, in my opinion, to an already struggling Chinese economy. And that's what we're going to cover in this video, but first, let me run the intro. What's up, guys, and let's get right into this one. So you can see here in the Wall Street Journal, they noticed that there was weakness in August as a result of rising inflation, but more importantly, slowing global growth. So this is a risk that we called out on this channel a while ago. As interest rates continue to increase in the Western economies and the consumers get more and more pinched, they're going to stop purchasing as much as we all expected. I mean, that's the purpose of those higher interest rates at the end of the day anyways. And of course, if the factory of the world is China, if people are purchasing fewer items, then fewer items need to be produced at that factory. And so that's exactly what's happening. And thus, this is another item that's hitting China right now. But let's dig a little bit further into this article because I want to explain to you guys exactly what's happening. So you can see here that in this article, they said that last month, Chinese goods shipments to the rest of the world rose by 7.1%. So I actually think that this is not that bad considering that the domestic economy in China is growing at a rate much lower than that. And they try to explain what's going on. So they're saying that the slowing growth was partially reflected by the disruptions in factory production. But I really think that the recent flare-ups in COVID-19 cases and the bigger issue of Chinese authorities stepping up restrictions ahead of the Chinese Communist Party gathering in October is a big item of caution, as I do believe that it could potentially cause more and more factories to close once again. And guys, remember that President Xi is looking for a third term. So they don't want anything to happen from now until October. So they probably could sacrifice some economic activity in anticipation of that. And I do believe that that's already starting to happen. You are seeing some China-focused YouTubers start reporting that. And so you are starting to see it happen. So, at the end of the day, I didn't expect COVID lockdowns to be impacting China for all of 2022, but here's where we are. And this now becomes another risk that we have to add going into 2023 when it comes to investing in China. And here's a little bit more information on the shipments slowing down. So in Taiwan, the previous article said that Taiwan was the area where shipments grew the slowest. And so you can see here that Taiwan's shipments actually grew only 2% in August. And compare that to economists were saying, where they said that they expected exports to grow at a rate of 11.6%. So less than 20% of that mark is what they hit. So that's scary. And they explained it in the article in that highlighted section where they say that Taiwan's export grew at the slowest pace in more than 2 years, which is the latest sign that a slowing global demand is weighing on the economy and could cause more trade pain in the months to come. And look, they're only increasing rates more and more. And so, of course, you can see more pain down the road. But it's not only China that it's experiencing export pains right now. Another large global exporter, India, is also slowing down. And so what India is saying is that the Russian-Ukraine war, the China-Taiwan crisis, supply disruptions, and just slowing consumer demand globally is leading to lower demand and thus lower exports out of India. So at the end of the day, this is something that's impacting every exporter right now. And this is what I'm talking about when I mean that restrictions could potentially be increasing. So COVID cases in China are beginning to rise as in August, which is leading to lockdowns in several cities and once again threatening to depress factory operations. And so it's tough to tell how much of this is just due to more testing as a result of October not being that far away, and how much of it is actually COVID cases rising relative to the same amount of testing compared to previous months in the year. So it's very difficult to tell. I don't get full information here, and so I just do the best with what I have access to. Now, investing in China is very challenging at the moment, but there is a way to diversify your risk. But before I get into that, I just want to remind you guys that 80% of the watch time on this channel is coming from people who are not subscribed. So if you can, please consider subscribing to the channel. And this is what I mean about being able to diversify your risk. Look, if you're already over invested in China and you need to diversify out, notice that the tracker that the Patreons have access to is now showing that there's approximately 30 names that are trading for under 75% of their intrinsic value, and there's 6 names trading under 50% of their intrinsic value. And some of the ones that I pointed out here was Zillow, Paramount, Canada Goose, and Microsoft, and of course Alibaba, but that's a Chinese investment. So the point I'm making is that your portfolio should be diversified in this environment. You shouldn't stop investing. I mean, do what's best for you. I'm not going to give you advice, but at least I'm not stopping to look for opportunities in this environment, but my portfolio has become substantially more diversified in 2022, and I encourage you to do the same. But once again, it's never investment advice. Now, the question is, how do you get access to that Patreon tracker and all of those models that come with the tracker? Well, you can access all of that at the lower tier of the Patreons, and if you want to join us for an epic live presentation every month where I reserve my very best work for, you can join us at that upper tier of the Patreons. The one thing that I do want to point out, and it's a recent video that I just released, is that at first it was just Alibaba that was experiencing challenges with their cloud business, but now it looks like the cloud business in the US is also not exempt from a potential slowdown or recession, and I actually covered all of that in this video right here.